All right. Goodwill from business combinations. We will see our business combinations section, but why not talk about it here because it is decently important. And goodwill pops up a lot throughout the test, right? It is a solid intangible asset that solid intangible. What an oxymoron. All right. So it is an important intangible asset. Goodwill represents intangible resources and elements connected with an entity that cannot be separately identified and reported on the balance sheet. Goodwill is capitalized excess earnings power. Again, example here. Now, gosh, I mean, I'm going to say recent, but this was now a while ago, and I'm just dating myself, but that is what it is. So Salesforce, ticker CRM, they bought Tableau. They purchased Tableau, a data visualization software. God help me, I don't even remember the purchase price anymore. Let's just say it was $10 billion. And Tableau was actually a stock trading on the market, and that stock was trading for $6 billion. This purchase created goodwill of $4 billion. Now, I'm going to describe this in a few ways. It's essentially a flex, right? It's a flex. Now, could Salesforce have bought Tableau for $6 billion? Sure. Why didn't they? Many, many reasons, right? We're not so much concerned as to why. Now, goodwill is, as it says, it's good. You are showing goodwill. Like, you are showing that you believe what you're buying is actually worth a lot more than what it's valued at. So there's that factor. There's the factor of you're now creating an asset of intangible on your balance sheet. A lot of reasons. Again, not too important why. Now, keep in mind also, we'll see in our section on business combinations is, let's say we somehow get a discount. We paid $5 billion for a $6 billion. Now, this $1 billion difference is now a gain. It's now a gain. It's a bargain purchase. We purchased it for less, and it's a gain. But not important for this section. Definitely important for later sections. So I wanted to point that out. That's what we've got going on here. All right. And what you're paying up for, it potentially is management or marketing expertise, technical skill and knowledge that cannot be identified or valued separately. So again, goodwill, we'll see this in partnerships as well. With goodwill and partnerships, a partner might come in and contribute less capital, less cash to the partnership, but there's goodwill recognized because maybe they bring in expertise, they bring in knowledge, right? That the partnership otherwise wouldn't have had, so they don't need to contribute as much cash. Let's see our methods of accounting for goodwill, as well as what we do to maintain goodwill. So this is goodwill arising from business combinations. Well, we've got our acquisition method and our equity method. Well, equity method involves the purchase of a company's capital stock. That's what I mentioned here. We bought Tableau stock on the stock market. Goodwill is the excess price of the stock's purchase price over the fair value of the net assets acquired. Looks like that $4 million is going to be our goodwill under the equity method. What about acquisition method? Well, goodwill is the excess of an acquired entity's fair value over the fair value of the entity's net assets, including identifiable intangible assets. Not too different in terms of methods. It's just this is purchasing the company's capital stock. This is more so a private sale, I would say. Whereas this is them just going on the stock market, buying it all up, right? And then what about maintaining goodwill? Costs associated with maintaining, developing, or restoring goodwill are not capitalized as goodwill. They are expensed. Goodwill generated internally or not purchased in an arm's length transaction is not capitalized as goodwill. All this is saying, again, is just that the only time goodwill can be created is when there is a purchase of another entity, and that is going to exclude everything else. Like I said, with partnerships, that's a little bit of a different story. You could have goodwill method there when you include another partner, but if you choose to use the goodwill method, but that's completely different.